Good afternoon or good morning, depending on where you are in the USA today. Thank you so much for joining this webinar. And thank you so much, first of all, to AGS for giving me and the JVC the opportunity to speak to you guys today about some really important issues for our industry. So big thanks to Meyer and big thanks to Catherine, of course, for sharing their platform with us and giving us access to come right into your earbuds today and give you an update on what's been going on the legal side of things in our industry. This was such a great opportunity for the JVC to share with you guys. So I decided instead of just focusing on one thing, I'm going to cover a couple of different topics, and hopefully at least one of them will be super relevant to you and your business. I also have the Q&A box open on my computer, so if you have questions that come up while we're talking, please just feel free to type those in and I'll try to address those as we're going along here. So my name is Tiffany Stevens. I am the President, CEO, and General Counsel of the Jewelers Vigilance Committee, which is a trade association that's been around for 103 years and was started by jewelers for jewelers to help everyone in the industry with all of the different kinds of legal issues that you may face in your business. And as an industry, we actually face quite a few of these issues, and some of them are quite complex. And you definitely need to make sure that you're on top of things to make sure that your business is nice and healthy and thriving, and that you don't get interrupted by something going wrong and sort of finding out afterwards, right, that you needed to comply with something. So this one's called One Trip Around the Sun, and I'm just going to give you an update on all the many, many things that have happened in about the last year since we saw the FTC guides come out in July 24th. So, and I'm coming to you today from 2nd Avenue and 42nd Street in New York City. So we've got everything closed and shut down, but if you hear a siren or two, that's just the sound of New York City behind me. So I've broken out, there's actually way more than we could even talk about, more than I've included here today, but I've tried to keep it somewhat sane and reasonable for you and broken it down into 5 major issues that have come up in the last year. So issue 1 is the one that we'll spend the most time on by far, and the others will sort of serve. I'll just kind of give you updates on them to make sure that you've got everything nice and fresh in your business and are taking care of things. So you see here that issue 1, 2, 3, 4, 5, that's what we'll cover: the guides, some stuff about undisclosed, Wayfair, which is the sales tax issue, made in the USA, just a refresher, no changes there, but just want to make sure you've got the current understanding. And then issue 5, what you might have seen in the trade press, what's come up around the State Department and anti-money laundering. So our first issue is the FTC guides. So these guides were revised and published for the first time in 22 years on July 24th, 2018. The build up to that was about a 6-year process of working with the FTC, the JVC working with the FTC, as well as other people in industry, to give our edits and our sort of hopes and dreams and what we wanted to be changed within the guides. I've broken up a few topics here today. The guides themselves are almost 200 pages long, so obviously not everything is included, but I've tried to give you the highlights today that I think will be most relevant to your business. And I've broken it up by product type. So you'll see we'll start with metals, go to diamond, pearl, gemstones. So first of all, just to back up for a second, I think we kind of throw around the word FTC guides, but just to make sure that we're all on the same page and understanding what they're really about, is they're there to protect, they're regulating the way that we advertise as an industry. So there's this overarching federal law called the FTC Act that says, hey, don't deceive US consumers via deceptive advertising. And the FTC has that broad rule that applies to all US businesses. And then they've made these little kind of handbooks that are applicable to certain industries that they think are more prone to possibly having deceptive advertising than others. And one of them is our industry. So that's what when we say the FTC jewelry guides, what we mean is that set of rules that the government has stopped to really spell out to tell us what to do and what not to do and what would be deceptive and what wouldn't be deceptive about the products in our industry. And the whole purpose of that is just to protect that US consumer, and the US consumer that they're interested in and the way that they think about the average consumer is truly average. So who is just of average intelligence, of average, time, attention span, and definitely someone not in our industry, someone who has average knowledge of what jewelry terms may or may not mean. So really, the whole thing here is to just really disclose, really spell things out, make things really, really obvious to that average person. And there are a lot of rules. Obviously, that's what this whole thing is with the FTC guides, is a set of rules. But what the FTC is going to do if they decide to enforce, which they are doing, is look at the totality of your advertising and apply this standard to it. Is it obvious to the average person with no knowledge of the jewelry industry what it is that they're buying or what's being advertised to them? Is it conspicuous? Is it really, really obvious? Have you communicated super clearly what it is you're selling, what it is you're not selling, what it is you're promising or not promising the consumer? So that's the framework of what this whole thing is all about. So quickly, the guides are now final. We went through this whole editing process for 6 years, from 2012 to 2018. The FTC dropped the guides last summer. The process is closed. So that's it. And now they've moved on, we've seen in the last couple months, to the enforcement stage. So we'll talk about that at the end. So they've told us what all the new rules are, and now they've given us a few months to live with them. And then for people who were violating them, they are coming around and doing enforcement and suing and warning and doing all the things that they do. So that being said, they can reopen consideration of any element of the guides at any time at their discretion. But for now, they've just made all these changes, and I think they want us to live, from our understanding, they want us to live with these changes and make sure that our marketing and advertising is right in line with all of the new things that they've said will protect the US consumer and not be deceptive. And like I said before, and you may hear this just sort of in the gossip mill, the jewelry guides themselves, that document it's true, that's not a law, but that's really, don't be deceived by that, because what the guides do is explain this very real federal law called the FTC Act and the deception provision that we're all working to make sure we don't violate. So while you wouldn't be sued under the guides themselves, and that is true, you would be sued under the FTC Act. So these guides do have very real teeth. And as we saw in April, the FTC, for the first time in decades, is starting to enforce around them. So, okay, so now that we have kind of the background of what these guides are, why you should care, and how it could affect you in your business, let's think about what the changes are that we've seen. And again, going through these pretty quickly, and happy to chat with anybody one-on-one, or anyone here in our office at the JVC. We'd be happy to chat with you about your particular product or questions. And even if you have an advertising, whether that's a print advertisement or something that you're thinking about putting on social media, we can help talk you through what we would guide you towards doing to make sure that you're in alignment with the guides. So one of the big changes, and this is really more of a task-oriented change than just sort of a philosophic or huge change, is rhodium plating. So the revised guides do now require that you must disclose rhodium plating, and that's something new for all of us. So white gold, if it's rhodium plated, you need to go ahead and disclose that. So you could do sort of a abbreviation. You don't need to spell out all of rhodium plating, but you could put RHDPLT or something like that to disclose on the tag or in the case, or certainly if you're selling online, you want to make sure that that's part of the description of the product. And with all of this stuff, and with all of the disclosure that I'll be talking about today, again, the conspicuousness, the obviousness of it is really important. You can't put it in like little tiny print at the bottom of the page or something like that. It has to be upfront, really obvious. And if you're doing something on social media, you're going to want to go ahead and disclose upfront. You don't want to bury it in a hashtag or anything like that. And if you are actually selling your products online, you want all of these disclosures to come to the consumer for them to consider before they move a product into an online shopping cart. So please be aware of that in all the different disclosures that we'll talk about today. So yes, so rhodium plating got to be disclosed, kind of annoying, but hopefully you're already doing it. And if not, you're getting the information today and you can make the adjustments. In addition, as usual, you must assure the reasonable durability of any coating that you put on. So if something is a brooch, that's going to be different than a ring, because people wearing a ring on their finger, and maybe the quality of the coating needs to be a little bit thicker to make sure that it wears and tears like any other ring that someone would have. Whereas with the brooch, you're not touching it as much, so you don't need as much of a plating, which is what the reasonable durability standard is all about. Okay, so this is this is a really big change. In the United States, there's no more 10 karat minimum threshold for gold. So previously, you could only call something gold jewelry if it had at least a 10 karat minimum threshold of caratage. Now, if you just use the word gold jewelry to describe a product, what you're implying is that that product is 24 karat gold. So only use the words unqualified gold jewelry if it is a 24 karat piece, because that's what that means. But otherwise, if you said 12 karat, 14 karat gold, now you could say, ostensibly, depending on the strength of your alloys and how confident you are in what you're either getting through your supplier or making yourself, 8 karat gold, 6 karat gold, 2 karat gold, 1 karat gold, right? So there's no floor and there's no threshold. So this is new as of this year. And at the JVC, we're developing a point of view, and we might be going back to the FTC and asking for them to put a floor in, because we do feel like perhaps the consumer is at a bit of a risk having absolutely no floor for gold. So we will get back to you on that. And if you want to be part of that process, please say the word and we'd love to have you. But for the moment, there is no floor caratage minimum threshold on gold. Now, if you're calling something gold jewelry and you're putting the caratage, you must, you're claiming that it's gold, you must, like I just said, disclose the fineness under 24 karat gold. So you always need to call it out, 8 karat or 8 karat gold, or whatever that is, because the words just gold jewelry or gold ring or whatever imply 24 karat. So this a similar type of thing happened to silver, which is that there is no more minimum threshold for silver, as long as you disclose the fineness of it. So here we have the example of 750 PPT silver. So as long as you're telling people what it is, it can be under 925. Now, the nuance with that is there's a separate law that applies just to silver that defines sterling silver. So that does still stand because it's a separate law. So to call something sterling silver, you still have to have 925. To call something coin silver, you have to have 900. But otherwise, you can use just silver as long as you're disclosing the fineness of it. And lastly, for our friends in platinum, there were no changes with the new guide, so everything remains the same there. Okay, so we'll move on to diamonds, and I'm going to go backwards and I'm going to address last the question that usually comes up first. So be patient if it's right there at the top of your mind. Okay, so if you're selling laboratory grown diamonds and you're doing it on purpose and you know you're doing it and you're excited to advertise these products, you're going to want to use we're guiding people into using one of 3 words. So previously in the old guides, you could use laboratory grown, laboratory created, manufacturer name created, or synthetic right before the word diamond, and that was going to meet the standard you needed to meet to disclose to the consumer that that is indeed a laboratory grown diamond. The new guides came out, really not much has changed in the eyes of the consumer. So in the revised guides, all that happened is that word synthetic was taken off of the list of the 4 sort of pre-approved words. Now you can still use synthetic, and we'll get to that in a second, but it's just no longer listed as one of the 3 or 4 recommended words. Now we are left with what we had before, which is laboratory grown, laboratory created, or manufacturer name created. So those are all called out as A-OK. We have a 4th category that says some other word or phrase of like meaning so as to disclose clearly the nature of the product and the fact that it's not a mined gemstone. Okay, what does that mean? We don't know. This created some confusion in the trade last year, but the FTC was not actually taking a side in our inter-industry debate on this issue. They were more closely aligning their guides with the First Amendment because they're a federal agency. They're always walking the line between telling us what we can and can't do, but also having enough room remain for free speech and free markets and commercial speech. So this 4th category is meant to say, hey, you can kind of climb out on the limb and use a phrase of like meaning. And if it's the wrong one, we'll sort of slap you down, basically, which is exactly what they did in April. And they, if you've seen the letters that they sent out to some of our colleagues in the industry, above ground is not something that they like. We've now come to find out, as well as some other words. So we would, being the nerdy lawyers here at the JVC, we would guide you towards using one of these 3 pre-approved words as your sort of safe words, knowing that they are okay. As long as you're making the disclosure in a really conspicuous way and otherwise in line with what the FTC wants, you can use one of these 3 words to disclose your lab-grown diamonds and be in the clear. And again, the disclosure needs to be right next to the word diamond, laboratory grown diamond. Another word that people like to use is cultured. So it's okay, you can throw it in the mix, but it doesn't stand alone. So you must have already met the standard of including laboratory grown, laboratory created, or manufacturer name created. So you could say cultured laboratory grown diamond, right? But you can't just say cultured diamond. That doesn't meet the standard. You have to use, here in bullet point 2, one of these 3 words, and then you could add on cultured if you like. But it does not stand alone. Okay, so practical application of all this. For natural diamonds, for a diamond that comes from the earth, the word diamond unqualified stands. So, right, that's always been the case in the industry, that the word diamond means a natural diamond from the earth, and that remains so. So that is the way it's been, and that's the way it still is. Just want to make that clear because kind of going around the country, I've heard some confusion around that. So the word diamond alone still means a natural diamond from the earth. Always has, still does. If you're selling a lab-grown diamond, you're going to want to use one of these 3 disclosures, and you're going to want to put it right next to the word diamond. And there is that 4th category. You can use a phrase, but it is at your own risk. And we would recommend people don't do that, or just, realize that they might be taking a risk, especially given what the FTC has come out with as of April with some of the enforcement that they've done, that they've been even a little stricter than we thought they would be when it has come to enforcement. So please use one of these 3 terms. And if you want to use something else, you're certainly able to, but again, you're calling out on a limb. And again, cultured is not enough. And now we know that above ground is not enough. All right, so synthetic, that's another phrase that sort of made the rumor mill in the last year. So yes, the FTC removed the term synthetic, the word synthetic, from its list of 4 sort of pre-approved phrases for lab-grown diamonds, but it didn't prohibit it from being used. You can still use it. It may be the most appropriate term in some cases, particularly when if you're translating from other languages, if you're translating from scientific documents, if you're harmonizing, we are a global trade by all means. If you're harmonizing with other countries, and that's the word that sort of translates between languages the easiest, feel free to use it. It does seem like it's fallen out of common parlance in the US, in the English-speaking trade. It does seem like lab-grown or laboratory grown is a little bit more common these days, but yeah, you can still use it. It's still fine. the FTC did say, please don't use it in a way to create confusion for consumers. So don't use it in a way that disparages the lab-grown product and makes people think that it's fake. So that's the only sort of prohibition around the use of the word synthetic. As long as you're not using it in a mean-spirited, disparaging way, and you're using it in a descriptive way, you're totally fine. So another thing that's really important when we're talking about diamonds is previously in the guides, there's a whole different section that talks about how you're allowed to use the words real, genuine, natural, precious, and semi-precious, and similar terms in advertising. You can only use these words when you're referring to or selling a natural product from the earth. So you cannot use real, genuine, natural, precious, or semi-precious to describe lab-grown diamonds at all. You also, we'll get to this in a second, you also can't use them to describe lab-grown or synthetic colored gemstones. But yes, so keep in mind, you can't just, I told you before, you could kind of add in the word culture to the mix if you've made your disclosure with diamonds, lab-grown diamonds, and that is allowed, but you can't add on, just because you've made the disclosure for lab-grown, you can't add on real, genuine, natural, precious, or semi-precious in that string of words that you're using to advertise the product. These words are preserved and only to be used for natural products from the earth, diamonds, as well as colored gemstones. And that has been true. That's been true for decades, and that was retained in the guides this past summer and remains true. Okay, so I'm talking about this last. This is sort of the thing that had come up first in the trade, and it has a little bit of nuance to it. So the revised guides did eliminate the word natural from the definition of a diamond. So at the beginning of the guides, they define what a diamond is, and you see here the new definition. And the only difference between this new definition and the old definition is that the old definition had the word natural before the word diamond. So basically, I've just walked you through everything you need to do to disclose lab-grown diamonds. And I think you'll see from everything we just went through, you say the word diamond, you mean a natural diamond from the earth, right? So it's not, you can't use the word diamond alone to describe lab-grown diamonds. I'm hoping that the way that I've walked you through this kind of clears that up if that was a question in your mind. The real thing that happened when this changed in the guides is that the FTC was putting us all on notice that the lab-grown sector of our industry was included in the guides. So the guides apply to everybody and to all products. And so they wanted to make clear that the lab-grown diamonds were indeed subject to regulation and rulemaking by these FTC advertising guidelines. So that's why it sort of brought them in to knowing that they need to follow these rules. It didn't change the landscape of how you're allowed to advertise lab-grown or natural diamonds. I hope that's helpful. And happy to answer additional questions if you have them. So really quickly, we'll touch on pearls, especially since it's the month of June, Pearls Month. So previous guides, no specification that treatments to pearls must be disclosed. New guides, you do have to put treatments to pearls if the treatment isn't permanent, if it requires special care, or it significantly affects the value of the pearl. So and then the guides also recommend if there is special care required, that you go ahead and say what that special care is, either the do's or the don'ts. So an example would be the dyeing of pearls should be disclosed. Why? Because perhaps it's permanent, so we meet that, but it significantly affects the value of the pearl. So we didn't meet that third part. So in the second bullet point, if it kind of goes against any three of these things, then you need to, if it's not permanent, it requires any special care, or it significantly affects the value of the pearl, you're going to need to disclose. So colored gemstones, let's talk about colored gemstones for a second. There were some pretty big changes there. So the revised guides specifically address products made with gemstone material in any amount of filler or binder, so lead glass or polymer, it's deceptive to use the unqualified gemstone name or simply treated ruby, treated turquoise, treated whatever to describe the product. You've got to call out what it is. It's also deceptive to use the lab-grown language. So lab-grown language should only be used for a product that has been wholly grown intact, right? You can't sort of glue some things together and call it a lab-grown or synthetic. You need to make sure that it was fully grown in a lab. So they gave us a little bit of guidance here on how to comply with what they want. So you may use composite, turquoise or gemstone name, hybrid gemstone name, or manufactured gemstone, type of gemstone, just as long as you're, again, being really clear and it's conspicuous and it's obvious and it's conveys that the product does not have the same properties as the name stone would be found, you know, whole and intact in its natural state, and that it does, and that it requires special care if that is the case. So let's go through just a couple of examples. So for a lead glass filled ruby, an appropriate disclosure would be composite ruby, lead glass filled, special care required. For a turquoise product that's bound by polymer that does not have special care requirements, right? So you don't have to do anything to keep it looking good. You can just let people know what it is. The appropriate disclosure would be composite turquoise, polymer bound, and that's it. So just please remember, disclosure is key. If there's special care requirements, go ahead and call them out just to manage your consumers' expectations. And you don't have someone coming back to you with something they've inadvertently ruined because they didn't take proper care. And we always advise people to over disclose, right? Just be overly descriptive about what someone's getting. That's the best way to protect yourself. Another new part of the guides for colored gemstones are the varietal names. And this is something that JVC asked for specifically. So it is now unfair or deceptive to use the incorrect varietal name for a product and therefore confuse the consumer. So you cannot use the word yellow emerald to describe a golden beryl or heliodor, right? It's not an emerald. The average person might think, oh, it's an emerald, it's just yellow. No, you need to describe it with what it actually is. Likewise, green amethyst, also not okay. I'm sure you can think of other examples, but the bottom line here is just not to mislead a consumer into thinking they're getting something that they're not. Okay, so we touched on this. I'll just quickly kind of bring it around. The laboratory grown gemstones rules are the same as for diamonds. So if you have a laboratory grown ruby or sapphire, you're going to want to disclose in the same way as you would with a diamond: laboratory grown, laboratory created, or manufacturer name created. Or you could go into that murky kind of fourth category at your own risk. And again, the words real, genuine, natural, precious, and semi-precious are reserved just for products from the earth. So don't tack any of those on to a description when you're describing an actual laboratory grown colored gemstone. Couple quick miscellaneous changes. There's certainly many more in the guides, but we thought that you guys might be interested in a little bit about handmade. That seems to apply to folks every once in a while. So you can call something handmade or hand wrought when the entire shaping and forming of such product from raw materials and its finishing and decoration were accomplished by hand labor and manually controlled methods, which permitted the maker to control and vary the construction, shape, design, and finish of each part. So the second CAD gets involved, we're falling out of handmade and hand wrought or any other mechanical process. There is a list of items that are considered raw materials that we see here. And in the new guides, we had a couple new materials get added in: precious metal clays, ingots, and casting grain to the list of raw materials. And I see here we have a question about varietal names, and I will be happy to follow up with you offline if you want to send me your email in the Q&A box too on this one. Okay, so we'll continue to work and educate the trade. If you think there's anyone else we should talk to about this, we've been going around the country talking for about a year now about what these changes are, but if you have ideas about where else we could go and help out, please let us know. And we're also in touch with the FTC constantly. So we are going back to them about the gold stuff. We've talked to them about some other issues, filed some briefs with them. And so we'll continue to do that. So if you have issues that come up while these guys are final, we'd be happy to help out there. And someone else has a question, hand forged the same as hand wrought? And the answer to that is yes. Okay, so we talked about how to disclose your diamonds, your lab grown diamonds that you're selling on purpose, right? So I just wanted to briefly touch on the other side of the coin, which is the undisclosed lab grown diamond issue and the concern that some people have that there are undisclosed lab grown diamonds in Melly or even in bigger stones. And what happens if I accidentally sell one of them and didn't realize it and the consumer finds out and I lose their confidence, or what happens to me legally, or what am I supposed to be doing? So I just wanted to touch on the fact that it's really important to make sure that you've got integrity in your supply chain, that you're asking your suppliers lots of questions, and that you're asking them for assurances that they are doing the testing. At the JVC in the next 6 weeks, we'll be releasing a templated contract for retailers to use to push back on their suppliers and make sure that they are receiving proper assurances that they are being protected, because not every single retailer can buy expensive machines and test everything 100%. We think that everybody should do something depending on what your resources are. And certainly if you're a larger business, many larger businesses have started to go ahead and consider it a cost of business to buy this technology and operate this technology and test everything 100%. But smaller businesses might not have those resources. So perhaps you do spot checking and send some things into GIA every once in a while. Make sure you have a nice tight vendor agreement and that you're making sure that your vendor is giving you information that you feel confident in, and that perhaps they are doing all the testing and sealing things up and sending them to you. We'll give you some ideas when we release that templated vendor contract for you to use later this summer. And I also just wanted to call out Project Assure. That is a multi-organizational project that brought together a bunch of different machines that are detection machines that are on the market, tested them against a lot of product, and publicly publish the results. So let's say you're a retailer, you don't have the resources to buy machines and test 100%, but you're doing sort of spot checking. You ask your supplier via your beautiful new vendor agreement to give you assurances, and they say, oh, sure, I'm testing. You can say, okay, which machines are you using? And then you can go to Project Assure and double check and see what their success rate has been for that particular machine, and either decide that you feel confident in that assurance that your supplier has given you, or perhaps seek a new supplier or ask your existing supplier to invest in a different machine or start using a different machine that maybe has a better performance rate. So that's how things might come together on the undisclosed side of things. Okay. So our next issue, very quickly, is Wayfair. So you might have heard about Wayfair. It was in the general news because it was a Supreme Court case that applied to all industries in the US. And basically, it's just the court system catching up with the fact that we're all shopping online now. The jewelry industry took a really big stance on this one through the organization Jewelers of America, JA, and what they were calling sales tax fairness. So there were many brick and mortar jewelers who felt that online only sellers were getting a major advantage because they were not having to pay sales tax. Their consumers were not having to pay sales tax. So if you're making a big purchase, like you're buying a $10,000 bracelet, are you going to want to pay, if you could get around that 5 or 8% sales tax? Like, many people want to do that. So the Supreme Court case was decided last summer and took that away and sort of leveled the playing field for online versus brick and mortar selling. So that's good news if you are on the side of the fence of brick and mortar. The bad news is now we have to do it. So if you do sell at all online, or you sell remotely to someone not located in your state, you do have to go ahead and collect the sales tax of that state in which they're located. And this was a federal decision at the Supreme Court, but the Supreme Court punted it to the states, because it's a sales tax issue, to decide what it looks like for each state. So as a retailer or a seller, you are going to have to figure out, your top few states that you deal with, if it's outside of the one that you're situated in physically, if you have a physical location, and make sure that you are paying those taxes. We, as a JVC, has a chart of all the current laws in each state, all 50 states, and it's available through us. We've also shared it with AGTA, AGS, and JA. And I'd be happy to share it with anybody on this call who doesn't already have access to it. It changes because the states are coming into compliance, so we try to keep it as fresh as possible for you. There's a couple different things to consider. You are only triggered in having to pay these taxes if you sell a certain amount of product to people in that state, and most of the states are about $200,000 and $250,000. So if you have sales in a year of less than that to a certain state, you might not have to worry about this for that state, although some states are quirky and have other weird rules, which is why we put together this big chart for you. Additionally, you can imagine this affects like every US business. So there are some different software tools out there if you want to Google around if this really affects you and you do sell a lot remotely or online, where you can use sort of a plugin to just make sure that you're collecting the proper taxes as you're doing these transactions, and you're not having to refer to a chart, which could be a little bit cumbersome. Another, if you have an accountant, your accountant should have already talked to you about this, and if they haven't, this would be a very good thing to bring up in the next meeting you have with your in-office accountant or accounting firm. So quickly, no big changes here. Made in the USA, our next to last issue. I just wanted to highlight and reiterate, this is something that's regulated by the FTC, and something the FTC has sued other industries about in the last year and collected hundreds of thousands of dollars. There's a case, an enforcement case this year against a hat company. And so there's no reason why we wouldn't be subject to this as well. So it's an existing doctrine that applies to all industries. Basically, to say something's made in the USA, or to imply something's made in the USA by like putting an American flag on it, it has to be wholly made in the United States. It's almost impossible for us to reach in the jewelry industry, because not only does the manufacturing have to be done in the US and the design, the component parts themselves have to originate from the United States. So unless you have a piece of jewelry with gold from Utah and a Montana sapphire that was cut and polished in the United States, you're probably not going to be able to claim that it's made in the USA. So just be aware. I mean, that would be kind of a silly thing to, right, like be sued on, or have your business like risk losing your business over something like this. But for the most part, you're not going to be able to say something's made in the USA unless it's completely, all the parts are from the US, the design, the manufacturer. And so, right, like one thing we've come up with lab grown diamond folks, they may be growing in the US, but then they're sending it to India to get cut and polished and sending it back. And that's going to disqualify you from a made in the USA claim. So just be aware of that. Don't wander into trouble on this one, because it would be easy to do. The other aspect of this is you can make other claims as long as you're just being really clear. So for example, Apple, if you look at your phone or your iPod or whatever, it's going to say designed in California. And that's how they get around the made in USA claim directly. So you can make other claims that are true and descriptive, like, designed in New York, or made in the USA from the world's finest materials, or made in the USA from the most beautiful gems in Asia, or whatever. As long as you're being really descriptive about what it is you're selling and not just making the bald made in the USA claim, you should be fine. So this is another issue that JA is very actively pursuing in Congress and trying to change. So we'll keep you guys updated if there are any changes on this, but for now, no made in the USA, pretty much in any instance. Again, happy to talk you through something. If you think you've got the exception to the rule and you can make the claim, would be very happy to do that. The other thing to be aware of here that people have run into trouble is like, you know, Shinola made in Detroit. There's a thing that came up in New York City through the film office that now a lot of different products are saying made in NYC. And those things aren't true either. So those are like made in USA, and you really should stay away from making those kinds of claims. We talked to the NYC people about it at the mayor's office, and they sort of passed the buck and said, well, if anybody got sued, we've actually created the contract in a way that we're protected, meaning the mayor's office or the city government is protected, but the jeweler wouldn't be protected, right? So please be aware that making made in, you know, if it's your city or your state or whatever, might have the same repercussions as a deceptive made in the USA claim. So lastly, we've got AML, which stands for anti-money laundering. And it's always been a really big issue for us in our industry. And it is really becoming an even bigger issue for us. So I'll try to keep this as short as possible. I feel like there's so many things I could say. Essentially, the point of this is to make sure that you're not dealing with, unwittingly dealing with or laundering money for criminals or terrorists. And our industry, given the nature of our products as being highly valuable and highly portable, we are considered a risk for money laundering. And pretty much everybody in our industry needs to comply with anti-money laundering. The Patriot Act made that clear back in 2002. If you're dealing with over $50,000 in precious metals and gemstones a year, you're going to need to have an AML program. There is a small exception for some retailers. If all of your dealers are US based and have existing AML programs that you can verify, then you might be exempt from this, or you will be exempt from this, but it's a pretty tough standard to meet. So most people are going to need an AML program. The good news is the program is not super complicated. It does take a few, you can sit down and spend a few hours to kick it off. And then you will, about once a year, do kind of a fire drill test and make sure that everything's working properly. You can kind of fold it into your existing accounting system and live with it pretty easily. We can walk you through as the JVC. We can show up in person and help you get a program going, or we can come in and do your testing, or we can come get your program going and then come in and do your testing once a year, whatever is going to work best for you. We just want to make sure that you're doing this. We also have a DIY kit that you can buy and do everything yourself. Basically, you just are taking a better look at how money is coming in and out of your business with the lens of anti-money laundering and running some names through a database and making sure that you're picking out anything suspicious and asking for proper documentation from everyone that you're dealing with. Two other parts of this that get included are the 8300 forms, which is just a reminder if you're dealing in any transaction or related transaction, so that's going to be transaction in close proximity to each other of $10,000 or more in cash, you're going to need to file an 8300 form and identify who that individual is who's trying to convert over $10,000 in cash into jewelry. We need to know their name. That's part of making sure that we're not unwittingly laundering money for people. And that's also cash equivalent. So that if you're going to use gift cards in your business, we'd love to talk to you because you can kind of back into some of these cash issues by using gift cards or a hybrid of gift cards and cash in any transaction or transaction within a small period of time. SAR is the other issue, and that's a suspicious activity report. That's a paper that you file directly with the government. If you think someone came in and let's say that they wanted to buy something for $25,000 in cash, but it seemed kind of fishy to you and you ended up turning them away. So you don't have the 8300 form because they didn't actually buy the product and give you that cash, but you can file a suspicious activity report and that gets put into a database that the government can use when they are trying to break up bigger kind of criminal rings or money laundering rings, helps create the pattern and can help solve a crime. Our industry has been not great at filing these, and so we would really suggest that we are being watched, we now know, by the federal government on this issue. So if you have occasion to file a suspicious activity report, please do. You'll be helping not only yourself, but everyone in the industry. So that brings me to what I just alluded to, which is that we are under stricter scrutiny on the anti-money laundering issues. So we were already under strict scrutiny. Like I said, the law went into effect. It's a federal law that everybody has to do this. It went into effect in 2002, and the Treasury Department enforces it. So that's the IRS. So they can show up at your door at any time to enforce, and they have done that in the middle of the country and in the western part of the country in the last year. We haven't seen as much on the East Coast, but we think that might be coming. So it's good to just have it all sorted and have your folder together. So if someone knocks on your door, you can hand over your binder and they don't come in and crack open the books of your business. So we already knew there was enforcement in this area via the IRS. The other way that people find out the hard way they need an AML program is through their bank. So the banks themselves, financial institutions, are under a lot of scrutiny for money laundering and just general regulatory infractions. And so they have really strict AML provisions now, and all of their clients need to meet that same standard. So your bank might call you, and we've seen this at the JVC very recently. I'm going to close your business account this week unless you can prove to me that you've got an AML program. Your banker might say these words to you. And so we want to make sure that you've already got everything zipped up and in shape, and you can just send it on over rather than having to completely disrupt your business and come up with figuring out how to create your AML program, in that kind of panicked, pressured situation. The third thing that's come up recently is some of us here in New York were called into a meeting with the State Department, who informed us that our industry is a threat to national security, and they want to see us doing a lot more on this anti-money laundering front and being able to turn around and show the government that we are not dealing with malign regimes such as Venezuela, such as Iran. So again, AML is going to end up being sort of the bare minimum that we're all going to end up having to do to make sure that we're not unwittingly laundering money for anyone around the world. So that's definitely the starting point. And then we're working with State Department. There is a possible policy solution coming from state on additional regulations that we as an industry might have to follow on origin and other kinds of claims that we may need to make to track product and make sure that we're not, again, accidentally helping any bad guys launder money across the world. So the place to start is definitely your AML program. Okay, so that wraps up what I had for you guys. I would just really say thank you so much for joining today. Really appreciate, I've got here on this slide my contact information as well as my colleague Sarah's contact information, who is our senior counsel here. We have other lawyers on staff as well who can help. So please feel free to reach out to us at any time. And if you're not a member, we'd love to have you as a member. We are membership supported, and that's how we get to keep doing our work in a neutral way. So we'd love to have you join. It's very accessible financially. And if you have any questions or we can help you in any way, please do let us know. And there was one question that came in through Q&A, and I'll get right back to you privately over email. If anything else comes up for anyone, let us know. And otherwise, have a wonderful day. Thanks again.